Hey guys, welcome back. You're still tuned in to CNBC TV18. You're watching Trading Hour, and the next guest that we have right now, let's actually talk about the markets with them. Srinivas Rao joins us. He's Chief Investment Officer at PGIM India Mutual Fund. Srinivas, thanks a lot for joining us. This is Pavitra. And my first question is just that now that we're in this situation where we are talking about recession fears only mounting with this kind of global setup, do you think that our market is likely to be very range bound in the coming few months at least?
Thanks for having me, Pavitra. Yes, next few months are going to be quite crucial. I think we need to be careful. So I think when you see globally what is happening, one need to be much more watchful and careful given the way things are panning out. But I think within India, things are looking far better. I think the way our macro is playing out, the way our corporates are performed in the last few quarters and the outlook, I think that's a lot more positive to be. But the economy may be not linked to the global factor directly, but markets are clearly linked. So I think if you have a challenge in other markets, the Indian market will also react to that. I think to that extent, one has to be careful.
You like banks. Is it a bit of a crowded trade, particularly on PSU banks, where we've seen a very sharp run-up in the last 6 months?
Yeah, I think we are not big fans of PSU banks, especially second tier. We like the top 2-3 PSU names there, but I think beyond that, I would say it's more of a tactical trade right now. I don't think the issues that have affected PSU banks, structural issues have changed. Yes, I agree. It's a fact that right now we are in a very, very sweet spot in terms of credit cost and also the macro environment. So to that extent, I think the entire financial sector will do well, and that's what market is factoring in. And many of these PSU banks are trading at a very, very attractive valuations, and that's where people are getting excited. But I don't think we are fans of all the banks. We like the big ones. We like the better run private sector banks. So I think we would like to stick to them. Whereas right now, I think tactically everything looks good.
What else looks good, Srinivas, apart from banks, tactically?
Sorry, Prashant, what did you say?
What other sectors do you like tactically?
So, I'm saying structurally, we like banks and cap goods are the two sectors that are very positive. And other sector that we are positive on pharma, I would say it is more of a defensive play than on a tactical play right now.
What in capital goods? Can you explain?
Sure. So I think what we are seeing is there is a clear revival in manufacturing, whether it is led by PLI or even otherwise. After 10 years, the capacity utilization of the Indian manufacturing industry is close to peak. I will not call it, it is already at peak. And also, more importantly, the sentiment is positive, Prashant. Where for someone to commit for a capex, is looking at what are his cash flows in the near term that have just passed, where we've seen corporates have delivered well in terms of cash flows and growth. And more importantly, what is the mood and outlook going forward, like let's say next 1 to 3 years? And I think that is where things are looking much better for corporate India, and that in turn will lead to people committing for capex. And I would say many of the cap good companies are already factoring in that. So to that extent, one has to be extremely choosy in terms of what you invest, because these stocks are already trading at a significant premium to their historical averages.
Okay, and Srinivas, you also mentioned that you do like the pharmaceutical space. What way would you play this? Do you look at the hospitals, the labs? Do you look at the pure play drug makers? What within pharma looks good to you?
We like hospitals. We don't like labs for sure. I think they are headwinds for the sector, and valuations are still not cheap. And I would like the other regular pharma names where we are actually seeing there as a play on both domestic pharma and also the US business. I think both are likely to see a reasonable comeback in terms of growth in the coming quarters.
But Srinivas, so many of these companies like Lupin, Sun Pharma are facing US FDA issues, regulatory hurdles. So how do you pick a stock that isn't going to be impacted by that?
I'm sure. I think last 2 years have been extremely benign in terms of FDA regulations because of the shortages FDA was benign, and in the coming months, we will see, we've already started seeing FDA getting tougher, and it will impact few companies. But I think what one has to see is what is the likely impact, even if there is an alert on the company's business. I think when we are seeing the large companies, even if there is an alert, the impact of this on the business is in the lower single digit. I think to that extent it is manageable. But first of all, one need to understand and appreciate the fact that I think FDA has made Indian pharma industry a lot more efficient and also cleaner business. So I think to that extent, I would look at FDA as a positive contributor to doing business, best manufacturing practices, processes. So FDA alert, if it is on a big product, then I need to be worried. But if it is on a product which is contributing to lower single digit top line, I don't think that's a worry.
Okay, around that entire manufacturing theme, any other kind of subsectors, etc., because it's pure play large capital good equipment makers, there are few, but there are lots of ancillary industry subsectors around it. Do you like anything there, Srinivas?
Yeah, we like few names, like for example, we are positive on bearing, we are positive on the green energy stocks. So you're right, Prashant, it's a very wide spectrum. In that, let's say you have one hand contractor, which are civil construction companies. Though we like that space a lot, but we don't like to invest in the companies because we are not comfortable with the companies there, given the kind of risk reward that plays out there. But then when it comes to the other segment, whether it's say auto ancillaries, we are positive. We are positive on autos. And also other manufacturing companies. So I think on a broad brush, we are saying that we will definitely see pick up in manufacturing, but within that, certain sectors are likely to do well. For example, thermal power is an interesting example. So I think after 3-4 years of complete lull in the ordering, we are seeing pick up in ordering. Finally, coal is no longer a bad word. So, and for a country like India, given where we are in terms of per capita consumption, there is no way our energy needs can be made by renewables or only green energy. So we need to increase thermal capacity, and we are finally seeing some activity there as well. So I think, we as a full-time professional investors, we are looking at where are those opportunities and trying to invest.
All right, got it. Srinivas, since we have you, I'm just going to throw in one question on the mutual fund data, which came through earlier for this, for last month. We have seen inflows into equity funds going down. Large caps this time saw an outflow of around 1,000 crores as well. Do you expect this trend to continue in the coming few months, amid all of this global volatility? Are people just moving a little bit away from equity right now?
I don't think so. I think we will see a few months data here and there, I think, which is actually very healthy. I think last 2-3 years, people have had a very positive experience investing in mutual funds. If some of them are taking booking profit, I think it is good. But I think structurally, directionally, I'm seeing more and more people getting convinced by what mutual fund can do and in terms of contributing to their long-term wealth creation. I am seeing more and more people starting SIPs. On your own channel, we've seen what a car manufacturer said around SIP is impacting car sales. So I think to that extent, it's a clear structural change that has happened in Indian financial behavior. So I am not worried that we will actually see decline in flows, but it is always good to see people actually booking profit and then coming back. I think that is a healthy sign.
All right, not worried about flows into equity mutual funds. Srinivas, thank you very much for joining us, and hopefully we'll get to speak to you very soon once again. With that, we are going to get into a short break now. On the other side, we have been telling you the sugar stocks have been clocking in sweet gains as the government slashes GST on ethanol meant for blending to 5%. We'll have Vijay Banka, the MD of Dwarikesh Sugar, joining us on the other side to discuss what this move could really mean for them.